Good afternoon, and thank you for joining us. I'm Bridget Anderson, the President and CEO of the Greater Vancouver Board of Trade. And welcome to our series of business resiliency webinars on navigating COVID-19. Today, we are focused on organizational tips and tax considerations for SMEs. In this time of unprecedented uncertainty, we want to ensure that our members and the broader business community can find answers to their most pressing questions. Through a series of free webinars, experts will provide guidance and answer questions to help you navigate the next step. We encourage you to take part in this discussion. You can engage with us on Twitter, Facebook, and Instagram using the hashtag GVBOT. And we're also using Slido for today's discussion. You can submit your questions. Just go to slido.com and enter the code there, GVBOT, tax tips. Before we start, and especially in these challenging times, we want to thank our long-standing sponsors called our Pillar Partners. They include TELUS, CN, YVR, BCIT, and Air Canada. We are very grateful for their support and whose annual partnerships and commitments enable the important work of the Board of Trade. Today's webinar is delivered in partnership with MNP and our supporting sponsor, British Columbia Securities Commission, as well our preferred media partner, Business in Vancouver. Today, we are joined by Mark Hogue and Kevin Wong from MNP. Mark is a partner at MNP and regional leader of MNP's private enterprise group in Vancouver. For over 12 years, Mark has focused on working exclusively with owner-operator businesses. He works extensively with clients who have expanded internationally. And Kevin is a partner and MNP's leader for taxation services in the Vancouver region. Kevin has more than 20 years of experience providing Canadian income tax compliance and Canadian specialty tax services to private enterprises. I'm going to kick things over to Mark first to start things off by sharing some best practices and tips for SMEs to stay operational and in preparation for recovery. And then we'll pass it over to Kevin to speak on tax considerations, and then we'll get some questions from you. Over to you, Mark. Please go ahead.
Thanks, Bridget. It's good to be here today and hopefully pass on some tips for everyone during these very difficult times. First off, I wanted to thank the Board of Trade for the great work they've been doing as far as having these webinars and sending out information to members really as quickly as it's coming out. I know there's lots of change that's been happening, and the Board of Trade's done a great job to keep things, keep people informed. So if we want to move to the next slide, we're going to talk a little bit about navigating through this crisis. We put a few topics here for discussion. I think today we're going to focus mostly on the stretch for cash flow. And then also Kevin will touch on some of the programs that maybe help with preserving the workforce. But there's many other topics that can be discussed, and I know the Board of Trade has been addressing many of those through other webinars. So if we could flip to the next slide. So the one thing I think is important to remember, and I know I've been thinking about it a lot, is that really during this time, the demand for our products hasn't ceased, it's just shifted. The market is still there for our products and services, for your products and services, but due to the crisis, people's priorities have changed, and we need to really look at managing our cash flow to help during these difficult times and to get to the other side. So some of the key items we'll be looking at the cash and liquidity management and then cost management during these times, and really building a cash flow projection to help with that. If you could go to the next slide. So next slide, please. So as we all know, cash is king, and what we really need to understand is what we can do, what the cash flow will look like over the next 3 or 4 months. And really that scenario is going to change. As we've seen, government programs are changing constantly. Demand is changing quite rapidly. So I'm going to break things up into a number of categories. I'm going to talk about customers and sales. Then we can talk a little bit about suppliers and vendors. And then also Kevin will talk a bit about the government programs, and I'll talk about some of the banking programs that are available. So from a customer and sales point of view, I think one of the key things is to reach out to your customers, find out how they've been affected during this time. Are there things that you haven't thought of that maybe they need your help with? Look at how you can adjust your sales. We've seen in the economy in Vancouver, lots of restaurants have moved to the takeout model. I ordered ahead and got ice cream put in the trunk of my car the other day. So that was great. They pre-ordered. Our local bakery, same thing, pre-ordering, picking a time and going to pick it up. So are there things that we can do to adjust during these times with the help with the business? Speaking to the customers will probably bring a lot of insight on what their needs are, and we can maybe adjust there accordingly to help with the sales channel. The other thing is looking at collections. How have you traditionally been sending out invoices? Has it been by mail? Has it been paper? Look at ways to accelerate that. Can you send out electronic invoices? Are there other ways that you can receive payment? If you are taking on new customers during this time, maybe getting some deposit up front. The other thing is also making it easy for people to pay. Again, traditionally, if people have paid by check, maybe look at making sure you have an online payment process set up so that they can pay more quickly. Paying online isn't just easy, it happens more quickly and you get the cash sooner. So that's another great way to deal with things. From a creditor point of view or from a vendor point of view, again, reach out to your vendors, find out how they've been affected. Can they still support your needs? Look at look and prioritize your vendors. Which are the ones that are the most important to keep your business going forward to address with your customers? See if you can extend terms. Can you extend payment for 30, 45 days while you go through this process? Talk to landlords, which has been a topic mentioned a lot. Can you defer rent payments? Look at those type of things. You may have had these conversations with people 2-3 weeks ago, but things have changed. So what their answers were 2 or 3 weeks ago may be different now than they were then. So that would be something to really reach out. And prioritize spending, obviously. Look at what is essential for your business and what could be deferred. Kevin's going to touch on some of the government programs, but I want to touch on it here too, because government is obviously a vendor or a supplier as well, and looking at your payments that you need to make. One of the things to think about is, okay, there's been lots of deferrals that they've talked about, but at some point those deferrals are going to have to get paid. They're just deferrals. So building that into your cash flow, knowing that, okay, come the end of August, there may be some payments due. There is some opportunity here. Most corporate tax payments installment payments are based on how you did in the prior year. So if you had a great year in 2019 and you've made larger payments in 2020, maybe you can reduce those payments now or stop those payments. Maybe shift those payments to a payroll account to cover the payroll CRA account balances, because those installments you've made now might not be necessary if your income is going to go down significantly. So if we want to just flip to the next slide. This sort of provides a list of incoming cash and outgoing cash to think about when you're doing those cash flow planning. The other thing to think about from a government point of view is, though there's been deferrals of filing and also payments, if you're going to be in a refund position, maybe file as quickly as possible so you can get that refund now rather than waiting later. So the last thing I wanted to talk about, if we go to the next slide, was going to be the banking programs. So there are a number of loan support programs. The one that probably has gotten the most attention is the Canada Emergency Business Account. This is the $40,000 interest-free loan. This is interest-free between a year and a half. And then at the end of that time, by December 2022, if you're able to repay that amount, 25% of that will be transferred into a grant. So on a $40,000 loan, you would only have to pay $30,000 if you can pay it back within that time frame. Otherwise, it'll shift to a interest-bearing loan. This program, as well as the next one I'll talk about, are funded through EDC and BDC, but they're being administered through your current financial institution. So you really should be speaking to your banker on a regular basis, finding and speaking to them about this program. Also talk to your banker about your current situation. Lots of banks have been understanding and appreciative and shifting your payment. Maybe now you can just make it principal only or just interest only payment for the time being, and providing a little bit of leeway from a cash management point of view. Another program is a small and medium enterprise loan program. This is guaranteed by EDC and BDC, again, administered through your current financial institution. This is still more of a traditional line of credit loan program. There'll be interest. You have to show a bit of a business plan, but they are making sure they're trying to be quite generous with these funds to help people through these tough times. Another program is the working capital loan that's run by BDC and EDC. This is something you would apply directly to with BDC and EDC. It's a program that's been around for a little while, but again, it's a great way to access cash flow and working capital for your business. So those are a number of items I wanted to talk about. I'll pass it over to Kevin to talk about some of the government programs that are available.
Great, thanks, Mark. 4 to 5 weeks ago, when the gravity of COVID-19 began publicly crystallizing, from an economic and a business perspective, the conversations with clients were mainly comments of how the world's been turned upside down. Since that time, the government's introduced an economic response plan that includes a number of financial measures to help individuals and businesses facing hardship. What we're seeing now is that after businesses have been adjusting to the environment and settling down, conversations with business owners have now turned to what government financial measures are available to them and what are some of the things they could be thinking of from a tax planning perspective. So what I'll do over the next 15 minutes or so is go through the main financial measures at a high level and talk about some of the tax planning points I've been going over with clients. When it comes to the support measures, the common question is what's available to me as an individual and what's available to me as a business owner. So I thought it'd be useful to organize the main measures in this manner. Starting at the top left with the individual, we have the Canadian Emergency Response Benefit, or otherwise known as the CERB. Although it's under the individual column, it is available to self-employed individuals that operate as a proprietorship. And the benefit is quite generous in my view. It's $2,000 per month or $500 per week for a maximum of 4 months, which leaves you with a total of possibly $8,000 in total during a 7-month period from March the 15th to October the 23rd. What does eligibility mean for an individual? Relatively straightforward. The individual has to be resident in Canada and 15 years of age. They had to have stopped work because of COVID-19 and who haven't voluntarily quit their job. They had to have income of at least $5,000 in 2019 or 12 months preceding the date of the application, and expect to be without employment for at least 14 consecutive days in the initial 4-week period. And they can't receive income in the benefit period. And I want to talk about that in a few moments because there might be changes to that. One thing that I do that's interesting to note in the legislation is that there isn't an arm's length test or requirement. So if you have a spouse or child that stopped working in the family business because of COVID-19 and otherwise meets the other conditions, they should be eligible as well. Applications began yesterday with the opening of the online portal. As I mentioned, one of the conditions is that the individual did not receive income in the benefit period. And yesterday, the Prime Minister acknowledged that some people were falling between the cracks with the CERB benefit, including workers with significantly reduced hours, and announced that the CERB program is going to be expanded to ensure that those individuals with reduced hours are also going to benefit from the CERB. So we're looking forward to some modification and expansion of the rules. Federal measures of tax filing and payment deferral. As most of you are aware, personal tax returns, which were normally due on April 30, have been extended. It's up there on the table. The other one is last week, the provincial government introduced what they call the BC Emergency Benefit for Workers. And it's a one-time payment of $1,000 to individuals who lost income due to COVID-19. We understand that the application should be opening soon, and a lot of the details should be released as well. Given it's intended to complement the CERB benefit I just discussed, I would reasonably expect same or similar criteria as well. Moving over to the right-hand column, temporary wage subsidy. This is one of the very first benefits that the government had laid out. And what's its objective? It's a 3-month measure that allows employers to reduce the amount of payroll deductions required to be remitted to CRA. So it provides immediate cash benefit to the subsidy to the employers. Who's an eligible employer? Pretty much all businesses that carry on as an individual, a partnership, or a corporation that's eligible for the small business deduction. And you have to have had have to have an existing business number and a payroll account. Eligible employees, that it's in respect of the program, quite straightforward. Any individual who's employed in Canada. Like the CURB, there isn't an arm's length, doesn't appear to be an arm's length test. So salaries to family members should also qualify. How much is a subsidy? It's equal to 10% of the remuneration that's paid from March 18th to June 19th, up to a maximum of $1,375 for each eligible employee, and to a maximum of $25,000 for an employer. This is a subsidy that any employer who has a payroll in the period March 18th to June 19th and is eligible for should definitely take advantage of, because again, it does provide an immediate cash subsidy by way of reducing withholdings that would otherwise have to be remitted to CRA. How is the subsidy calculated? It's calculated manually. CRA is not going to automatically calculate it for you, and there isn't an application that's required. So it's just each employer should calculate the subsidy and just reduce the payroll remittance accordingly based on the benefit. One thing we have to appreciate is that the government's been rolling out these financial measures without a lot of administrative details, not perhaps fully thought through. So once the environment settles, verification will likely be a priority of the CRA. So it's really important to ensure that you maintain documentation to evidence and support the subsidy calculation. Documents such as total remuneration paid in the period, the federal and provincial taxes that are deducted, and also the number of eligible employees in the period. Next one is the Canada Emergency Wage Subsidy, or CEWS as I call it, complementary to the temporary wage subsidy. Government released the general parameters of the subsidy a few weeks ago, which are generally informative, but they also raise a number of questions which hopefully the government will be providing more clarity and guidance on in the coming week. What's its objective? It's to encourage employers to continue employing workers. Like the temporary wage subsidy, it's also a 3-month measure that covers wages paid from March the 15th to June the 6th. Who's an eligible employer? Employers that realize a drop-off in revenues of 30% or more. So eligibility is going to be based on a change in monthly revenues year over year for the calendar month in which the period began. So for you take March, if March is the eligible period, you'd look at the revenues from March of 2019, and to the extent that there was a 30% drop-off, you'd be eligible as a business. For new businesses that were established after February 2019, who don't have a prior year comparative, eligibility is going to be determined by comparing monthly revenues to a reasonable benchmark. So one of the items, as I mentioned, or as I mentioned earlier, although the information has been informative, there are a number of questions that remain, and what's a reasonable benchmark is one of those. Hopefully the government will provide clarity in the coming week. What's the amount of the subsidy? Subsidy amount in respect of an eligible employee is going to be 75% of the remuneration paid, up to a maximum of $847 per week. Salary and wages, what's eligible remuneration? Salary and wages and remuneration that an employer would generally have to withhold on. They say that there's going to be a special rule that's going to apply to non-arm's length employees. And again, we await more clarity on what this special rule will be. There isn't an overall limit on the amount of the subsidy an employer can claim. So if an employer has, say, 10 employees and they're eligible for the maximum of $847, that employer would be eligible for a subsidy of $8,470 for the week. How to apply? It's going to be through CRA's My Business Account portal. And again, we await the government to provide more details on the application process, which hopefully will be made available shortly. There are a number of anti-abuse rules that are going to be introduced with the program. And as I mentioned, in respect of the temporary wage subsidy, verification process is probably going to be priority for CRAs. So really important to document your application and calculations in respect of the subsidy. A couple of important to-do points that we would recommend: set up a My Business Account with CRA if you haven't already. Set up direct deposit to facilitate payments from the CRA, because online payments are certainly faster than manual checks. And again, because it's going to, eligibility is going to rely on analyzing a drop-off in revenues for the months March, April, or May. Good idea to start completing financial monthly statements. Bring them up to date so that they're ready for submission. Next slide, please. So let's talk about some tax planning items for consideration that's main focus or quite commonly discussed with clients recently. Very first one, if you own a share or a debt of a corporation that's become worthless because the corporation's become insolvent or ceased to carry on business and it's in a loss position, the investment, generally in order to realize the benefit of a loss that you could then use to offset a gain, you generally need to sell the investment or realize that loss. There's a certain tax election that allows a person to elect to trigger the loss so that it can be then used to offset current capital gains or carried back to recover taxes previously paid with on a capital gain. So one thing to do is definitely review your investments in private or public company shares or debt that are worthless because the corporations become insolvent, and consider if making the tax election would be beneficial. Next one, accounts receivable. Mark talked about accounts receivable, and from an operational perspective, looking at whether or not you can speed up collection of accounts receivable. Certainly in the course of doing that, you're going to be evaluating accounts receivables, and there are various provisions in the Tax Act that allow a business to take a deduction in respect of accounts receivable for debts that have gone bad or where the collections become questionable. So certainly, a scrutiny of accounts receivable should be undertaken. Corporate loss utilization. This applies to corporate groups that have more than one entity, and where one entity in a corporate group has realized losses and as a result isn't going to have taxes payable, and you have another entity that does have income and will have cash taxes payable, you could look at implementing a loss consolidation plan in order to reduce the taxes of the corporate group as a whole. One common example for achieving this is to combine or merge a loss entity with a profit entity into one entity. A lot of considerations that go into this, mainly commercial. So certainly, if you're going to consider undertaking this, you shouldn't proceed without first consulting with your legal advisor. Transfer of 2020 installments. Mark had mentioned this. Again, if say you have a year end of November 30th, 2019, you haven't filed the tax return yet, and you've made corporate installments for, say, December, January, and February, you could look at transferring those installments to another account, say the 2019 tax account, file the return and cause a refund of those earlier. Looking at the middle column, planning to mitigate future taxes, an estate freeze or refreeze. An estate freeze is a term that many business owners may be aware of or have heard of. In an environment like the current, where the company values and investment values have declined, an estate freeze is a tool that allows you to basically lock in the value of your investments for tax purposes. The main benefit being allowing you to freeze the value of your investments using today's reduced value, therefore freezing the amount of related taxes that are going to be payable in the future upon a demise. For example, to illustrate, let's say you own shares of a company that prior to the current crisis was worth $1,000, and now it's been reduced to, say, $800. And you reasonably believe that the company is going to increase in value again to what it once was. An estate freeze would lock in this $800 value, so that upon a demise, the related taxes would be about $200, 25%, based on the reduced value. Future growth would then accrue to the successors. If you didn't undertake the estate freeze and the value of the shares went back up to $1,000, the related taxes would be $250, which is greater than the $200 I had mentioned. Conversely, if you undertook an estate freeze before the crisis and the value of the company or investments declined, you can still take advantage of the reduced value of your investments and lower your future tax bill through what is commonly described as a refreeze strategy. And that's basically allows you to adjust or right value everything to the present day value. Capital dividend account elections. This is a situation where you own, say you own a portfolio of investments inside a corporation or a holding company, and the holding company sells stock and realizes the capital gain. 50% of the gain is going to be subject to tax, and the other 50% goes into a notional account that's called the capital dividend account, or a CDA, which basically represents a balance that can be distributed to the individual shareholder on a tax-free basis by filing a certain tax election. The balance in a CDA account is increased. It's a running balance. It's generally increased by 50% of the non-taxable portion of gains, but it's also conversely decreased by 50% of capital losses, and is calculated as of a point in time. So the planning consideration is that if you have a holding company that previously realized capital gains, so that there is a balance in the CDA account, and it's expected to dispose of stocks that will realize a capital loss, then you should consider filing a CDA election before realizing the capital losses that would reduce the CDA balance. Just in the interest of time, I'd go over a final one, prescribed interest rate. Concept of income splitting is that income taxed in two family members' hands rather than one member results in less tax overall for the family unit. In a situation where one spouse earns employment income so that or business income, so that the highest marginal rate, and also earns investment income, they should consider placing investment income in the other spouse's hands. Unfortunately, a high income spouse can't simply gift the other spouse the capital to invest, as there are certain rules called attribution that would cause the investment income to be taxed in the high income spouse's hands. However, if the high income spouse loans the capital to the other spouse and charges a prescribed rate of interest, then the attribution rules are avoided. Prescribed interest rate is set quarterly by the CRA, and it's presently 2%. And I think with the general trend in interest rates recently, it's reasonable to expect that the prescribed rate could be reduced to 1% as well. As a quick example, let's say I have $2,000 of capital that earns a yield of 5%. So I'm earning $100 of investment income each year. So I'm paying $53 of tax. If I loan that $2,000 to my spouse and charge the prescribed rate of interest so that she earns the same $100 of investment income with the capital, she's going to pay less tax than the $53 I would otherwise have paid. So two takeaways. Let's watch for the prescribed rate, and if it goes down to 1%, to consider undertaking a prescribed rate loan arrangement. And if you have already undertaken a prescribed rate loan arrangement and have it in place, and it was undertaken at a time when the rate was higher than 1%, you could consider winding that one up and having a redo at 1%. The other ones are there, and in the interest of time, I'll turn it back over to Bridget.
All right, thanks very much, Kevin and Mark. That's a really fulsome overview, and we'll get to some questions from the viewers in just a moment. But maybe, Kevin, you could start and talk about the interaction on some of these programs. There has been a fair amount of confusion and understanding that the federal government is developing this policy very quickly, and there are more details to come out. Maybe you could speak about any interaction, whether it's between the CURB and the 75% wage subsidy, or even between the 10% and the 75%. I mean, how do businesses know which they are eligible for?
Yeah, good question. Usually the main source of confusion between the interaction really relates to the CEWS, which is the Canada Emergency Wage Subsidy, and also the temporary wage subsidy. Temporary wage subsidy being that 10% of the remuneration, and the CEWS being the 75%. They don't exist separately, so that a business isn't eligible for both, where they're going to get the temporary wage subsidy, and then on top of that get the CEWS subsidy. So if an organization or business is eligible for both the CEWS and also the temporary wage subsidy, the amount paid under the 75% CEWS is generally going to be reduced by the amount that's paid under the 10% temporary wage subsidy. So, organizations that qualify for both, I would recommend apply or not apply, but take advantage of the temporary wage subsidy of the 10% now, because that results in actual cash, immediate cash, by virtue of reducing the remittance of deductions. And then as you apply for the CEWS, just reduce the amount of the CEWS subsidy to the extent of the temporary wage subsidy. But they don't exist separately in that you're going to get one on top of the other. It's basically going to be a greater of.
Great, thanks very much. And I know that the calculation of the 30% reduction in revenue, there's still a lot of moving parts on that. So we'll leave that for now, because I'm sure people have questions about that. But Mark, if I could ask you a question about some of the supports that you talked about. First, let's maybe talk about that $40,000 loan. There are restrictions in place. It's really more available, and it's more that smaller businesses are eligible for this. Is that correct?
That is correct. Some of the criteria is that you're supposed to have, in 2019, you'd have payroll between $50,000 and $1 million. So large corporations wouldn't be acceptable for that. The other item to think about too is, what is it for? This is really supposed to be an emergency type loan. So it's for anything where costs can't be deferred. So if it's helping to pay rent, maybe helping to pay payroll, hydro, keep the lights on, those type of things. So It's very specific to the immediate needs of a small, medium-sized businesses. You may need to, that will cover short term, but you'll have to look at some of the other loan programs maybe to help extend things over the next few months or as we get into the summer.
And I think what's important to note about that $40,000 loan is that some of that is actually forgivable as well.
That's correct. So up to 25% of it will be is forgivable if you repay it by December 2022. So again, something else to work into your cash flow is saying, hey, it's a really good opportunity if you can pay that when it's due to get that as a grant rather than having to pay the full amount back later on.
Great, so let's go to some questions then on Slido. And I know that there's probably lots of questions that both of you can answer. So perhaps I'll try and direct it as best I can, but if either of you want to jump in, please go ahead. So we'll go to the first question here. If an employer's salary is 50% Work BC subsidized until May 15th, and I can't see the rest of the question because my video's in the way, but claiming 10% of salary from March 18th to June 19th be double dipping. And so I guess this is a question where they have interaction around Work BC and the subsidy. So Kevin, do you want to take that one on first?
Sure, that's a good question. The way the legislation works right now, eligible remuneration is simply, really simply just means salaries or wages that are paid. So there isn't any sort of adjustment mechanism to take into consideration whether or not those wages or salaries were subsidized. So, you know, in the context of the question, I guess you would be able to double dip. So if you had salaries of $100 and received $50 from Work BC, and the employer pays the $100, the subsidy should be based on the $100.
And I think this next question is about the $2,000 a month benefit, the emergency benefit. That is only applicable to people who have been already laid off. So the 75% wage is actually an incentive for employers to keep staff on the payroll. Is that correct, Kevin?
How do we, sorry, I had trouble hearing.
That's okay, it's the interaction. So somebody, if they are employed and they are continuing to work and the company is getting the 75% wage, that $2 a month is open to those people who have been laid off.
Right. I'm going to try to answer the question as best as I heard it. I just had trouble hearing it, but the curb, to the extent an individual receives the curb, I believe the curb would be because one of the eligibility requirements is that they don't receive any sort of income at all in the period. So to the extent that they're receiving you know, income from the employer, for purpose of the employer to get the cues, they shouldn't be eligible for the curb. Now, as I mentioned, the Prime Minister is going to be announced that they're going to be expanding the rules to take into consideration reduced hour workers. But as it stands now, to the extent an individual receives any form of income, they're not eligible for the curb.
Okay, great. And Mark, I'm going to jump down here to a question about those companies that are applying for the 75% wage subsidy. They need to show a 30% reduction in revenue. So are there specific documents that companies need to prepare should they're going to get audited in the future to show that drop? That's a great question that many people are wondering.
It is a great question. As Kevin mentioned, we haven't seen the particulars yet. I think the important thing is to keep the same financial records you would be keeping anytime when it comes to dealing with CRA, making sure your financial records are up to date, and then being able to look at a revenue from March to March, April to April, May to May. So it's just really keeping on top of those financial information, just as you would for any other filing. It is going to be difficult, I think, at times, because you're 25%, and so there's always could be adjustments. I think we're hoping CRA is going to show some leniency in this area when it comes to reviewing it later on, but absolutely keep as much documentation as you can to demonstrate the reduction in sales.
And just maybe on that 30% revenue decrease, maybe Kevin, you could dig into this a little bit more. What about those companies that maybe are startups, or it's hard for them to show, to show March 2020 from March 2019. I mean, how do you then be able to be eligible?
Yeah, great question. Is you know, as we mentioned, you know, a lot of information that's been released, but also just as many questions as well. And for new businesses that were established after February the 2019, who don't have a prior year comparative for March, you know, April, or who don't have a comparative, you know, what they say is that it's going to be, the eligibility is going to be determined by comparing monthly revenues to a reasonable benchmark. So one of the things that we're, you know, anxiously waiting for is more clarity on what a reasonable benchmark is going to be.
Okay. Mark, you were covering, you spent a lot of time talking about how cash is king, quite obviously. So this first question is really, it's about those SMEs that don't have income coming in right now. So those that have had to close their doors, the 75% wage subsidy is going to benefit those that are keeping some operations going. But how does that subsidy help those SMEs that maybe haven't been able to keep many of their operations going, or at all?
It's going to be difficult. I mean, you're right, that this is for those that can, and that's sort of the reason for it, is to keep the businesses, people employed. So to the extent that they can keep them on, if they were thinking of laying them off, this is an incentive to keep those people on board and keep them busy and trying to work. Really, it would be going to where they've had to shut the door. Really, it's going to be moving to the curb, where those employees are going to have to apply themselves for the wage subsidy program, or sorry, for the curb program on the $2,000 a month. I would really look at the Canadian Emergency Business Account for someone like that, where the business can apply to get that $40,000 just to get a little bit of working capital. I'm not saying it's going to be easy, because these programs, it's still taking some time to get the cash available. So it might be a little bit of time to get that. So I think looking to the curb would be the next one. And then talking to the bank about any emergency financing they can cover. Maybe you can extend your line of credit over the next couple of months until these other emergency funds come in.
And some businesses have been quite fortunate that they've been able to pivot to offer different products or different services that more fit in with what is needed right now around essential services and workers. But lots of businesses aren't able to do that. So you're right to explore all the options as far as cash. A question here about commercial property around lease payments and rent payments. This is certainly a huge consideration for many small and medium businesses. You know, April 1st came and went, and it was challenging for many of those small and medium businesses to pay their monthly rent. But now we've got May 1st coming up. So can we expect any support from either levels of government? And I guess we're really talking about all three levels of government in terms around some of these kinds of payments.
There's been a few areas in there. I mean, some of the things more for the commercial tenants, and Kevin, maybe you can talk to this a little more, is about deferring the property tax payments that may be coming up. There's some opportunity there. Really, again, it's talking to your landlords, and that we're really, as I've said before, we're all in this together. People understand. We know that some of the tenants have mortgage payments to make. So they do need some of that income to help with the rent, but will also appreciate that you've lost your income too. And it's not going to be easy to find other tenants at this time as well. So it's really that constant communication. I don't know, Kevin, if you had anything other to add from a tax perspective.
No, myself, I'm not aware of you know, specific support in respect of, not to say that there isn't, but certainly, I mean, what we've seen so far is you know, response plans coming from all level, or from provincial level of government, and also the federal. You would reasonably expect the municipal level governments to provide some form of relief and response as well. And best way they can do that is in terms of property taxes. So, you know, would I reasonably expect some support? Yes. Is there present? I don't believe so, but I'm not certain in that respect.
It certainly is an issue that we at the Greater Vancouver Board of Trade have been speaking to both provincial and federal governments about. I mean, it certainly is a #1 priority that has shown to be a big concern by many of the small and medium businesses in British Columbia. And so it is something that we continue to advocate for and have in discussions with government. Going to go down to estate freezes, and Kevin, the question there, the requirements to be eligible.
Oh, great question. A state freeze, there isn't sort of, one size fits all criteria. So is it available to all businesses? Yes, it is available to businesses, and also to the extent that you own, say, portfolio investments with significant value. And, what I would say in terms of criteria as it relates to a business is, in today's environment, considering an estate freeze, if you're a business owner that's near retirement and the value of your business is reasonably expected to increase again once we get through this crisis, then a state freeze is something that you should consider for the reason that I had mentioned. The main reason being, freezing the value of your business in your hands today at the reduced value, and therefore allowing the future growth to accrue to say the next generation. So your frozen value, your value's frozen, also the related taxes in respect to that value. So isn't a one size fits all, but that would generally be a good candidate if I had to describe the parameters.
Great, thank you. And if I can get the team behind the scenes here, put this next question up on the full screen so I can take, I'm not sure that some of it's cut off, so if I could take a look at it. I think that the gist of the question is that the company's main office is in Canada, but they're global operations, and that the drop in revenue is really a 30% drop overall. So does this still count, or is a 30% drop in revenue specific to Canadian operations?
The only, again, the government has yet to release the legislative details in respect of that, and the condition right now in respect of the revenues, that it has to be from arm's length revenues. So I would see that as whether the revenues are earned in Canada or abroad by that Canadian entity shouldn't matter.
Okay, and
but
we've
again,
got time.
we have yet to wait for the details.
Yeah, and those details we're expecting to hear more this week, and we're certainly passing them on our business resource page as soon as they become available. But there's time here for one more question, and Mark, I'm going to get you to speak to this. So small and medium businesses need cash right now, and it is taking some time for some of these programs and the supports to come into their bank accounts. So what can they do? What are the top couple of things that can be done to free up cash right now?
One of the things, and we talked a little about the interaction between the Canada Emergency Wage Subsidy and the temporary wage subsidy. The temporary wage subsidy really is available now because it's many people might have their payroll that has to be filed for April 15th. So as Kevin mentioned, it's a manual calculation. You can just reduce what you would have otherwise been making a payment for on your April 15th payroll deduction. So that doesn't require any waiting. That can be done right now to do that calculation. That would probably be the main one for that. The other option really is some of the items I talked about, following up on those accounts receivable, seeing what we can do to get that cash in right now while we wait for the subsidies, talking to the creditors and vendors as well, saying, hey, I've applied for these programs. No reason to believe I'm not going to get the $40,000 loan or some of the other loans, but I'm having in a bit of a cash crunch. So I think, as always, communication is probably the most important thing, to talk to both customers and vendors, to tell them the situation you're in. I think the fact that they know that these programs are there and money will be coming is something that will provide a little bit of value when you're having those discussions.
Great, thanks very much, Mark. And Kevin, any last minute thoughts about while companies are trying to get through the crisis right now, not to take their eye off the ball around medium and long-term planning as well?
No, as I mentioned, I mean, there are a number of financial measures that are available and a lot of different planning considerations that might be appropriate for their circumstance. So, last word would be really talk to your advisor and see which financial measure works best for the employees and you, and also what planning considerations you could consider that would be appropriate, because there's a lot of low-hanging fruit planning opportunities that people should be considering.
All right, thank you. Thanks very much, Mark and Kevin. I really do appreciate your time today. It was a great conversation.
Thank you, Bridget.
And you can watch this webinar again. Please visit the boardoftrade.com and our COVID-19 page, and it will be available in a few hours. We are going to continue this important conversation and stay connected, and we'll be continuing with our free webinar series on navigating COVID-19. And coming up tomorrow, we'll be hosting Mary Ng, the Minister of Small Business, Export Promotion and International Trade. We have also created a business resource page designed to provide planning toolkits and information to businesses and individuals in our region. And just go to boardoftrade.com and you'll find our COVID-19 page. This page will be updated as more information becomes available, and it is becoming available all the time, and we will update the page as those details are released. Thank you to everyone for being part of today's webinar. We look forward to connecting again soon, and to echo the wise words of Dr. Bonnie Henry, be kind, be calm, be safe.